Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today is the 29th of October 2019, so welcome everyone. Welcome to this Tuesday's afternoon session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Also, just a quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page here, which you can go and visit us on jfdbank.com and click on the research tab here, and it will take you to our research page, which we update on a daily basis, and I believe you can find a lot of useful stuff here for yourselves, guys, so feel free to check us out. But for now, let's jump into the charts. Now, the first one I want to touch on here is the S&P 500. So we do have the S&P is already running nicely here. It's open, and we in a way, what we're having here ourselves is a nice move higher. Of course, the big question here is, can it overcome the highs of yesterday? And just let me show you where that was. Basically, the highest point of yesterday was around the 3044 zone, so that's the all-time high for this index. And today the index already kind of initially it opened with a little gap here to the downside, but managed to quickly fill this one up, and now it seems that it's willing to travel further north. The only thing is, for us to get a little bit more comfortable with higher levels, well, a push above the yesterday's high would be required. But even then, don't get me wrong, even then we will be very careful with the upside, because we are quite overbought, and we are at our all-time highs, and in a way, if we get a push above the 3044 zone, then, well, it's still an uncharted territory for us, and or not only for us but for everyone, and in a way it would be difficult to find exactly where the holdup could occur. Of course, we could try to find some help here in our pivot points. So in a way, if we get a push above the 3044 zone, the next area to consider could be around the 3050 zone. So that's around the R2, so could be a nice potential target. But again, let's not get ahead of ourselves. First, let's see if we get that break. If we don't, and we see a slide back down, to be honest, for us, let's say at this point in time here, for us to start considering lower levels, well, ideally we would like to see a push back below the 3000 level. And I do understand it's quite a big of a move here, but to be honest, we'd rather be safe than sorry. And if we see a drop below the 3000, then we'll start considering lower areas in there, and then the price would be placed below its 21 EMA here on the 4-hour chart, and it could increase the chances of a further slide lower. So that's why for now, even if we see a slide back down, we'll remain neutral. This move lower could be part of a correction, but if it starts dropping below the 3000 level, then, well, this is where probably more bears could start getting excited. Jumping into gold. And of course, the whole risk on environment is not really helping out gold, and this is what I was talking about this morning. If you've looked at, if you watched my video this morning, if you tuned in, basically what I was saying, that given that the commodity failed to move above its 1520 territory and then kind of sharply sold off and got back inside this falling channel formation, there is a possibility we could see a further decline. And this morning we were still hanging around here, around the 1491 zone, roughly around there somewhere. But what I was saying, that if we see a drop below the 1490 zone, then yep, it increases the chances of a further slide. And as you can see, this is what happened. We had a nice drop here below the 1490, and this way the precious metal kind of drifted all the way down here, almost reached the 1483 zone, from which it kind of rebounded a little bit, and it's currently balancing just slightly above it, but also at the same time below the 1490 level, the one that I was talking about this morning. Again, in a way, if this, let's say, decides to retrace higher now and let's say pushes a little bit higher, if it struggles to push above the 1490, then we could see another round of selling. We'd put, and still we are aiming for this 1475 zone, so that's our main target right now. In a way, if it continues to, let's say, even if, let's say, if it climbs back above the 1490 zone, still the upper side of the falling channel could in a way keep it down, and we could see another round of selling. So for us to get excited about the upside, we'll start considering slightly higher levels if we get a push back above the psychological 1500 level. The only thing is that probably for those who are on a very cautious side, probably wait for a push above the 1520 zone and only then target the upside. So I do understand that we're missing out a bit of a space here, but again, all this territory could be a bit of a tricky one, and let's say if we would try to risk here, then in a way we'll keep it very short and very simple. We'll have a tight stop loss in place just in case this suddenly reverses and drops lower, because to be honest, we'd rather not play around with this too much, because it's all this territory is a very sensitive one. So in a way, it could go either way here, but if we get a push above the 1520, then there is a bit more chance for this one to drift higher. So that's why, guys, keep your eyes on this one. Let's see how this is going to play out. And for now, it seems that the upside could be slightly off the table. So let's see how this is going to play out. Ethereum. I haven't looked at this one for quite a while, and basically I just wanted to kind of show you this nice 4-hour chart. So after we sold off sharply last week here on the 23rd of October, which was Wednesday, the crypto managed to find good support near the 153 zone, from which it kind of reversed and pushed higher on Friday, and also continued moving on Saturday. So, and basically from there, kind of it found some resistance around this little level right here near the 199 zone, from which it kind of retraced back down, and it's currently forming something of a possible ascending triangle. If we look at this little picture right here, and let me just quickly put this one on the chart, basically. So, just I want to quickly draw this one for you guys, so that we would have it for our future reference. So basically, this is for now. This is what is forming out nicely. So of course, such patterns, according to technical analysis, tend to break to the upside. But before we could kind of consider this, we would need to see a break of this upper side of this ascending triangle, and only then we'll get comfortable with examining higher levels. Initially, we'll be very careful. We'll aim for the high of last week near the 199 zone, but if that fails to withhold, then yep, a further move higher could be possible. But again, for now, let's be on the safe side. At the same time, of course, somebody else could say maybe this is a nice pennant formation here, a bullish pennant formation. So of course, it could be that, because we do have nice kind of a pole here. It's not an ideal one, but maybe we could still consider that. So, but still, that's why we're gonna stick to the ascending triangle formation pattern. For should I say just pattern instead. So if this suddenly starts dropping lower, well, in terms of the upside, in terms of the downside here, it would be a little bit of a wait here until we could start getting comfortable with lower levels again, because in a way we would need to see a drop below the 174 zone, because if this decides to break this lower side of the ascending triangle and drifts lower, yes, it could move slightly lower, but this is a very strong strong area of support. And if we see, let's say, for example, a rebound back up from this area right here, from the 174 zone, and we see a nice rebound and a push back to the upside, then in a way we could be getting ourselves a nice wide-ish range. And this range would be roughly between the 174 zone and the 190 zone. So that's why I don't rush with the downside. If, let's say, if you see a drop below this this upside line or the lower side of the ascending triangle, because, like I said, it could in a way reverse at any point around here, reverse at any point around here. Even it could not even travel, let's say, lower towards this 174 and just find some support near all of these EMAs on the 4-hour chart, and then kind of rebound and push back to the upside. So that's why we're going to keep it short and simple, and we're going to keep it we'll stay very careful around this one. If we get a push above the 190 zone, then yes, that's wonderful. The next target for us is 199. But if that fails to withhold, then yep, we will be pushing further north. In terms of the downside, for us to get comfortable with lower levels, we will only examine the downside if we get a drop below the 174 area, and then we'll aim for these slightly lower areas. AUDJPY, so quite an interesting one here. So overall, of course, continues to climb higher, and whoop, why it's not updating? There we go. So something's wrong here, guys. There we go. We've managed to get this chart, the full chart. So since around the end of August, basically the pair is climbing higher. It's trading above this upside support line taken from the low of the 23rd of August, sorry, around the 26th, of August. Yes, probably that's what it's going to be. But at the same time, from a slightly shorter term perspective, the pair is trading above another kind of a bit of a tentative one of this upside support line. Now, again, it's a very tentative one, guys, so don't focus on it too much. For now, we're just gonna keep it here, just for our reference. The main thing to watch here is, of course, this 74.83 level, because if we get a nice push above it, a nice break above it, then this would confirm a forthcoming higher high, and we could start targeting higher levels. One of the good potential areas of resistance could be around here near the 75.20 zone. That's basically marked by the high of the 29th of July. But if that fails to withhold, then yep, this could continue pushing further north. And the next potential target for us, it could be around here, not around here, but around here. And that's roughly around the 75.60 territory. Let me just quickly adjust this carefully, guys, so the chart doesn't like it today for some reason. There we go. So around the 75.60 zone. So that could be our next potential target. But again, for now, just keep an eye on this one. Keep an eye on this potential breakout zone, the 74.83. If we do get a push above this, then yep, we'll aim for slightly higher levels. In terms of the downside, if this starts breaking this upside support line, now again, because it's a very tentative one, don't focus on it too much. What you could focus here instead on would be the 21 EMA on the 4-hour chart, or this 74.31 zone, which is marked by an inside swing high of the 25th of October. If we get a drop below this, then we will aim for the 73.91, which marks the low of the 24th of October. And if that fails to withhold, now this is where it could become a little bit more interesting for the sellers, because this could in a way lead towards further declines. This would confirm a forthcoming lower low, and we could aim for this this upside support line, the bigger one, the medium term one, drawn from the low of that 23rd or 25th of August, 25th of August probably more likely. So that's what we're going to be aiming for, and but only if we see a drop below the 73.90. So for now, like I said, guys, keep your eyes on some of these potential breakout points. Let's see how this is going to play out. USDCAD, I'm not going to spend too much time on this one. I talked about this one this morning, and basically what I was saying, that in order for us to examine further declines, a drop below the 1.3036 level is needed. You can see that the pair did travel all the way there, almost almost managed to reach that area, but kind of failed to break below it and rebounded sharply back up. For now, we remain neutral on this one because it's currently flirting with the 21 EMA, but even with the upside, for us to consider the upside, we need to see a push above the 1.3078 zone, and only then we will aim for higher levels. So that's why, guys, keep your eyes on this one. Let's see how this is going to play out, and keep your eyes on these two levels, the 1.3036 on the downside and the 1.3078 on the upside. GBP Aussie, also something that I looked at this morning, and this is exactly what I was talking about this morning. Basically, what I was saying was that initially we'll be keeping an eye on this potential descending triangle formation, so with the lower side of it being near the 1.8717 zone. So we did get a drop below this, but what I was also saying that if it's we should also keep an eye on this potential falling wedge formation. So even if we see a drop below the lower side of the triangle, of this descending triangle, still keep an eye on the falling wedge. And as you can see, the lower side of the falling wedge played out nicely and basically kind of confirmed this pattern as well. So in a way, we're having a situation where we do have two kind of conflicting patterns here at the same time, and those both of them are short term. So in a way, it would be, I would say, difficult to say right now at this point where exactly this would like to break out to. That's why we're going to keep it short and simple. We're just going to keep an eye on some of the potential breakout points. So as I said this morning, a drop below the lower side of the wedge could in a way confirm this nice descending triangle pattern, and we could see further declines here, further declines towards the 1.8516 zone, which also could test the 200 EMA on the 4-hour chart. So this is what we would be targeting if we see a drop below this lower side of the falling wedge formation, and of course the same time the rate would be placed below its 100 EMA here on the 4-hour chart, which shown as the green line. But if we consider this to be a falling wedge, then of course these patterns tend to break to the upside. But again, in order to kind of consider that, in order to get comfortable with this idea, a break of the 1.8857 zone marked by the high of the 28th of October would be needed. So basically, the highest point of yesterday, a nice good pop above that could in a way do the trick here for more buyers, and we could then see this pair getting a lift off here and pushing maybe back towards the highest point of October near the 1.9094 zone. So let's keep an eye on this one. And Euro USD. So the last pair for this session. This morning I was telling you guys to keep an eye on some of these potential breakout points. So as you can see, the pair did try to push above the 1.1103 zone. I talked about this morning, but as you can see, it did try to do that, but now kind of quickly got back below it. Don't get me wrong, we still have the full US session to go through, so in a way we could see this one maybe pushing higher again. But the only thing is that if we do get a push above this 1.1103, we will be very careful near this short-term tentative downside resistance line taken from the high of the 18th of October, because it could in a way keep the rate down again. So but in terms of the downside, a drop below the 1.1062-63 zone is required, and only then we will aim for lower levels, because this way, at the same time, the rate would be placed below its 200 EMA on the 4-hour chart, and there could be more chances for this one to drift lower. But again, let's keep an eye on this area right here. This is a bit of a, let's say, neutral zone for us right now, because at the same time, if let's say this level right here, the 1.1103 holds, and we see now, let's say, a reversal back to the downside, this would be confirming a nice little range here, roughly between the 1.1071 and the 1.11 1.1103 areas. So again, but that's I'm probably getting a bit ahead of myself, but I'm just letting you guys know that if we get a hold up around here and we see let's say a reversal back down, then yep, we would be getting ourselves a nice little range here. But that's why for now we're going to remain neutral and just continue observing the price action. If we get a push above the 1.1103 and we see a nice, maybe at least a 4-hour candle close above this, then we will consider possible test of this little downside resistance line. And then, like I said, we'll take it from there. Okay, guys, I really hope you found it useful. Thank you very much for watching and listening. I hope, like I said, I hope you found it useful. And if you want to join me tomorrow morning, yep, at my traders espresso, that's as always, and that's actually right now. I've probably confused you guys this morning about the time, because the time has shifted. So I accused myself. Basically, that's going to be 7 o'clock GMT time. So yes, guys. So let me quickly double check my own video here. So yes, guys, that's going to be 7 o'clock GMT time. So keep your eyes on that, and please join me then at 7 o'clock GMT time tomorrow morning for my Traders Espresso. We'll have a look at some of these instruments again, see how everything's performing, and see how everything has performed. Don't get me wrong, keep your eyes on today's UK Parliament vote. So we may get a bit of movement in the pound, but probably not much. But again, like I said, keep your eyes on the news coming out from there. And yeah, as always, guys, have your stop losses in place, and I'll see you tomorrow at my Traders Espresso. That's 7 o'clock GMT time. Thank you very much, and bye-bye.